you. Welcome to Krystal Traders Hub. During our last encounter, we took a live example of an uptrend. We took a trade which involved gold USD pair. And first, what did we do? We first of all established the market structure, which was at that time an uptrend. So within the daily time frame, it was actually shooting upwards as a result of the CPI numbers that were released last week, which was like a headwind for the USD. So when I say headwind is like a depreciating force for the USD. So just like I told us in previous class, when the USD is down, gold prices and other precious metal prices tend to increase. So as a result of that damning report that was published, so gold and other precious metals like silver and platinum actually witnessed a surge. So we established an uptrend within the weekly time frame. We also established an uptrend within the daily time frame, and dropping down to the 4-hourly time frame, we also established an uptrend. However, we went down to the 1-hour time frame and witnessed a retracement. Now, we were patient enough, and while we were exercising patience while the retracement was ongoing, we went further to draw our trend line within the uptrend. Remember, those two horizontal lines we drew, the topmost part being the resistance levels. Those are the turning points at the top, and connected them together, which was our resistance points. And those are the bottom. The turning points at the bottom were the support levels. So we connected them together, and we observed that pattern to make a retracement. Having made that retracement, so we were able to spot a reversal signal in form of a bullish pin bar within the 1-hour time frame. Having spotted that within the 1-hour time frame and on a support level, the key support level of 24.17, I remember, we placed a trade and we ended up making $1,800 and closed for the day. So that was a typical example of an uptrend. We also discussed about downtrends, and today I'm going to be talking about ranging markets. So while you understand now that an uptrend makes a series of higher highs and higher lows, moves upwards, the downtrends seem to make lower lows and lower highs, and moves in a downward. The price movement is within the downward spiral. So today we're going to be talking about ranging market. So what's a ranging market? A ranging market, it's more like a horizontal market. Like it's not looking like it's making an uptrend, it's not making a downtrend. It's just moving within a horizontal range. Okay, it takes it moves upwards, comes down a bit, keeps going, ranging within a specified support and resistance level. So how do you trade such market? Of course, it's usually very easy to do that. Having established your resistance level, which are the top connecting turning points, and the support level, the bottom connecting turning points. Now you actually wait for the price to hit resistance level, and then you sell at that point. It gets to the top, you sell, then the price comes down, and having hit the support level, of course, before it gets to support, it had done a downtrend. Having gotten to that support, you have to exercise patience, wait for your triggering signal, that signal that tells you that the bulls are about to take over the market. Then you can go in and go in there as a buy. So you want to buy at the support level and sell at the resistance level. So patience is usually key. And what you want to understand about ranging market, you have to be careful to spot that pattern. You want to accurately draw your establish the structure that's actually a range. Okay, so that is what you have for for ranging market. And the perfect example is that which is being shown on your screen. This is a Euro GBP chart. Now looking at this chart within the daily time frame shows you a ranging market. It's been like it's operating within a range. Okay, now looking at those lines that have been drawn at the top connecting those turning points, that's a resistance area, or you call it resistance level, and those connecting the turning points at the bottom at the support level. So how do you trade this? You actually wait. Currently it's at about trading at about 0.8510 ish. So currently that's exactly where the price is. It's actually around key support level now at this point. So just like we all know, just like I explained, you want to buy at the support level for a ranging market. Now it has approached support. You will be looking for buying opportunities because it's been selling for days. If you look at the candlesticks that preceded today's candlestick, it has been selling. So having sold for some days and it has gotten to a support level, so two things can happen. It's either it breaks that support and continues downwards, or it reverses back. But if you look at the price action and look at the history, it had always gotten to that support level where it currently is and made a reversal. So looking at the balance of probabilities, there is that chance that it's going to make a reversal very soon. So as a trader who understands support and resistance level and what price action is all about, so having sold for some days and it has gotten to a support level, so two things can happen. It's either it breaks that support and continues downwards, or it reverses back. But if you look at the price action and look at the history, it had always gotten to that support level where it currently is and made a reversal. So looking at the balance of probabilities, there is that chance that it's going to make a reversal very soon. So as a trader who understands support and resistance level and what price action is all about, you want to really observe the chart very well. Now this is a downtrend within the daily time frame. So you want to wait for a bullish daily candlestick. Please, it's possible. If it's possible for you to know this sentence, please do. It has been trending bearishly for days. Now, for you to understand that it has gotten to a turning point is if there is a daily candlestick that have formed, like a bullish candlestick that forms. It could form tomorrow. By the end of tomorrow, we find a green candlestick form. That means it's beginning to reverse, or perhaps it could continue its downtrend. So if you exercise patience and you're able to spot that daily candlestick, it could form by the end of tomorrow. Just like I said, it could also form by the end of next tomorrow. But you just want to be patient enough, because you don't go in there without establishing what the market is doing at that point. So as it stands at the time of this video, there is no signal telling you that the bulls are beginning to come in. In fact, what has actually made the Euro GBP pair to trend this trend downwards is because the GBP made this trend. What had made this pair trend downwards? Of course, when it's trending downwards, it means people are selling euro and buying GBP. So it's a sell, right? You sell the first one and buy the second one, like selling the primary pair and buying the secondary pair, right? Going by what we had taught in the past. So why are you selling the primary pair? Because the value can be compared to the secondary pair. And now, why has the GBP appreciated? Has appreciated because last night the inflation numbers for the UK was released and it was hotter than expected. You look at your screen, in fact, it's on the green. So the value we have that was the forecasted value was actually less than the actual. So the actual ended up being more than the forecasted value. So remember, when the CPI turns out green or turns out better than anticipated, then it's a boost for that pair. So if it's the other way, then it's a negative food. So currently it's a boost for the GBP because the CPI was hotter than expected, and that's exactly why investors have sold the Euro GBP pair. Sold in the sense that they have sold Euro and bought GBP. So for few days you want to be cautious of your trade, because looking at that the market sentiment, it's tilted towards a continuation pattern. But you want to be careful. You don't want to just jump in because, oh, it has approached support, it's at support level, I drew my line, it's there now, I can take it. No, it doesn't work like that. You really need to confirm that this is a turning point. And how do you hope to do so? By establishing a signal. It could be a bullish pin bar within the daily time frame. If it closed during the daily time frame with a bullish pin bar, or it actually closed with a bullish engulfing bar. So whichever signals the end of that downtrend and the possible beginning of an uptrend. And I want to also explain to us, whenever you find such a reversal, always make sure to place your support at the below the entry signal. So looking at this, your Euro GBP chart, let's assume now it's currently at I think 0.8510 or 0.809. So let's assume maybe by the end of tomorrow it forms a daily bullish candle and closed at 0.8529, something like that. So now it has closed higher than it had closed today. Today it's closing at about 0.8510. Now tomorrow it closed higher than whatever it closed today. So you're going to place your stop loss just below 0.8510. Maybe you could just place your stop loss at 0.8500 or whatever the case may be, and see if that reversal signal is actually a true signal or a false signal. If it's a false signal and continues is downtrend, then you just take your risk and close your trade. Otherwise, allow your profit to run and thank me later. Hope this video was helpful to you tonight, and if you've got any comments, if you've got any aspect of the program that you'll be needing clarification, please do well to leave us a comment and we'll get back to you. Don't forget to follow us on Krystal Traders Hub, like our page, and ask any questions. I'm going to be happy to respond to any question you will ask. So until then, have a good night's rest. Bye.